Bitcoin is overdue for a big move up. Even if it's just to reclaim previous ATHs, all-time highs, it is overdue for that because we've taken every single beating. As the metals went up, we went sideways and then down. But every the stock markets, traditional tech stocks have had a run. Everything has had a run except for Bitcoin. So I see this for value investors. They have to identify that the opportunity is here. You can invest in gold again, but what if that is the top for gold? You can invest in silver, but what if silver did top already, right? Bitcoin definitely has not topped. And all you need is $1 trillion of the however many 20 odd $30 trillion that came into the market for precious metals to move into Bitcoin, to rotate to Bitcoin.
For decades, investors have turned to hard assets during times of uncertainty, seeking protection from inflation, currency debasement, and systemic risk. But according to Samson Mow, CEO of Jan3 and a longtime Bitcoin advocate, the real monetary shift is no longer happening in gold vaults. It's happening on the blockchain. While traditional safe havens like gold may signal fear in the financial system, Mow argues they are ultimately stepping stones toward something far more disruptive: Bitcoin. In his view, we are witnessing the early stages of a global transition from analog scarcity to digital scarcity, where Bitcoin's fixed supply and decentralized nature position it not just as an alternative asset, but as the superior form of money for the digital age. For Samson Mow, Bitcoin is not a speculative trade. It is a structural solution to a broken monetary system. Please take a moment to like this video, subscribe to the channel, and turn on post notifications for more content like this.
A lot of the TA guys, or even the people that believe in the 4-year cycle, it's like they just have this belief in their head without any substantiation to it. Like, the market structure of Bitcoin is fundamentally, markedly different today than 4 years ago and the 4-year period before that. But even that aside, like, just because you toss a coin 4 times, and I keep repeating this, and you hit heads, heads, tails, heads, it doesn't mean you're going to keep getting that sequence forever. That's not how math works. That's not how probability works. So, it's like that, throw that away. But fundamentally, the market structure of Bitcoin today is completely evolved massively from the last 4-year period, right? Mm-hmm. And I don't even think it's the 4-year periods. It was just the business cycle and amounts of money flowing in that drove Bitcoin in those cycles. But right now, today, you have institutional buyers of Bitcoin, and you have treasury companies. You have BlackRock, which is the largest asset manager on the planet, pushing their Bitcoin ETF, which is their fastest growing, most profitable, and likely biggest driver of their revenues for the next 100 years in the game. And then you have all the treasury companies. You have Strategy. They will buy at any price. And they will do that because they have their preferreds that they can use to raise capital non-dilutively to buy forever. And that's what I call the infinite bid. It's just going to buy Bitcoin forever at any price. Then you have Metaplanet, you have Strive with these are all companies that are structuring these preferreds. And guess what? There are more coming. Then you have BSTR from Atom. Then you have XXI from Tether and Jack. Like, it's not going to stop. And even if there's that joke, like, Sailor will buy and then we'll dip the next day. How many days in the week are there, right? Like, eventually, there's not enough time for it to dip before the next treasury company executes their big purchase from their preferreds, right? Well, there's a lot going on, as you said, Brandon. Like, every few days, it seems like something is happening. And, what's the saying? Like, sometimes decades happen in months and months happen in decades or whatever. But that's exactly what it feels like now. Like, we're getting decades of things happening in like a few months. Decades and years, I think, as the saying goes. But yeah, the world is very tumultuous right now, and people are worried about a multitude of things. Like, it feels like everything is breaking down. And I think the rise of precious metals is the best indicator of that. Of course, they've cooled off now, but you have to look at the high-level picture, which is people are fleeing to what they perceive to be hard assets. Reliable, hard, sound assets. Now, do they have the understanding that you or I have about Bitcoin? Maybe not, but they will learn. And I think it's just cyclical. It's the concept of eternal September, where you have the new crop of students and they have to learn everything again. So all the metal investors are going to learn, guess what? Metals are not that great, actually. And maybe there's something else. And maybe that something else is Bitcoin. Because I don't know if you saw, but in China, there was a gold trading platform that just blew up, like multi-billion-dollar loss, and they just froze everyone out because they didn't have the gold that the people were trading. And they said something like, we'll reimburse you 20%. And I think that definitely has an impact on what happened with the metals. But this is just the problem with precious metals. You cannot trade in size at spot markets, right? Even if you can trade at spot markets, you're taking a discount. Like, I know a lot of Bitcoiners that came into Bitcoin through the precious metal journey. And what they learned was when they buy, it's easy to buy. You can even buy at Costco. When you want to sell, you're going to have a hard time finding someone to take your shipment, and you're going to take a discount on spot price to sell it back to them. And they're just going to have to learn this again. Like, why is Bitcoin the apex predator? It's because it is so liquid in every market. And it's not an exaggeration. You can sell it at any time. And that's what we see. People are using Bitcoin as that dumping ground for their fears: geopolitical uncertainty, fear of war, fear of pullbacks in their favorite stock market, like AI or whatever, or even precious metals. It is because Bitcoin is so liquid and so easy to use that it is the dumping ground for a lot of these guys when they have any fear. But going back to your original question, like, the metals are the indicator that something is happening. And if you look at that chart of the German mark against gold when it was collapsing, it's like going like this, right? That's basically what we're seeing right now. The massive run up in metals and back down. And eventually this will bleed into Bitcoin, in which I call is the great rotation. As those people start understanding that what they want is actually Bitcoin. What they're seeking as a safe haven is Bitcoin. But that is going to take a bit of time, but it will come. And there's a massive amount of capital. Like, you saw gold double its market cap. You know, it went from 20 to 40. Silver went 3.4 times, right? So there is enough money floating out there. It's not that there's not enough paper fiat money out there. There is plenty of fiat paper money out there. And that will make its way to Bitcoin.
Samson Mow explains that short-term price suppression in Bitcoin does happen. He points to large sell-offs at predictable times, coordinated dumping, and forced liquidations as factors that create sharp volatility. But in his view, these tactics only work temporarily and cannot stop the bigger trend. He says there are mainly three groups pushing prices down. First, highly leveraged traders who take on too much risk and get liquidated when the market moves against them. Second, trading firms that try to manipulate the price for short-term profit. And third, potentially dishonest platforms that may be selling Bitcoin they don't actually have. The problem for all of them is that their strategies are risky and unstable. Over-leveraged traders eventually get wiped out. Manipulators can get caught off guard by sudden price spikes. And any exchange selling non-existent Bitcoin risks insolvency if too many customers try to withdraw at once.
Playing into what you've been thinking about for a long time?
Well, there's a lot to unpack there. So let's go into first the manipulation side. I wouldn't say David Sachs is doing anything like that, but there are definitely players that are trying to push the price down. Like, you can see it. It's very plain, like the 10 a.m. dump. When the market's open, it dumps. And I did a 10 a.m. dump on a Saturday. Like, these dumps don't happen organically. Every fiduciary or every investor that is looking out for their best interest should not be market dumping, right? Like, you want to maximize your return by selling at a good price without massive slippage. So there's only three groups out there that would want to dump it. Like, either you're someone trying to suppress the price for some reason, and you're going to dump with, I would say, I don't even know if it's like traditional paper Bitcoin, like derivatives. I think it might be more malevolent, like FTX style. Some exchange doesn't have the coins and they're selling them, that style, because it's too easy to track normal paper Bitcoin. It's like the fraudulent paper Bitcoin. The second group is like people that want to push the market down because they're hedged. Like they're a trading firm and they hedged already and they want to tank Bitcoin. So they're going to, dump it and try to recover. And the third group is just traders that blow themselves up. So these are the only ones that really want Bitcoin to go down. They want to see those big red drops and instill fear in the market. But I think there is a heavy cost to that. Each one of those silos comes with a heavy cost. Obviously, the trader that blew up, that's a heavy cost on them. Yeah. But the firms that the trading firms that are trying to do this, there is a risk that it doesn't work and they're going to be sidelined because the Bitcoin bounces aggressively on the upside. And then the people that are doing it with Bitcoin that doesn't exist, obviously that's going to come to roost when there's a run on that exchange or whoever that they need to produce the coins. And that's going to send Bitcoin going back up too. So it's like not sustainable, this kind of overall suppression of the market. And fear, I don't think, is enough to push us down. Like we've seen selling. There's like, I don't fully believe in on-chain metrics, but there are some on-chain metrics of some people sell. And there's public disclosures of whale selling too. And you have to think adversarially. You cannot take it as face value. So maybe that whale that said I'm selling or sold and he made it very visible was trying to trigger a down run that he can buy back up lower, right? Because a lot of these guys are traders too. Maybe not like the guy that blew himself up on the weekend with Ethereum, but they are types of traders. But still, like that cannot happen forever because there is the buyer of last resort, there's a hodler of last resort, and there are the infinite bid treasury companies. So it has to stop eventually. And if you think about it too, like what would drive us lower? If you look at the past days, I think the first day, Saturday, was a mass liquidation of an Ethereum trader, like a big Ethereum trader. He blew himself up and lost $250 million, and that tanked us. And then us dragged down by the precious metals and fears in Korea. Like you said, there's so many things happening so quickly. But like that is it. Like this is forced selling. If you don't need to force sell, like let's say you're a holder of ETF, even if you're a retail holder of an ETF, and you don't need to force sell, and you've written Bitcoin off, you think, okay, I'm going to go and buy real estate, whatever you want, right? You should set a limit order or tell your broker, I want to sell at 87 because I know Saylor will buy at 87 eventually. Why would you keep selling down? And the fact is, we've been sideways, in my view, for a year, and we've had 4 clear red months. So Bitcoin has been battered. And I don't think people realize how battered we've been. Like, Bitcoin is overdue for a big move up. Even if it's just to reclaim previous ATHs, all-time highs, it is overdue for that. Because we've taken every single beating. As the metals went up, we went sideways and then down. But the stock markets, traditional tech stocks have had a run. Everything has had a run except for Bitcoin. So I see this for value investors. They have to identify that the opportunity is here. You can invest in gold again, but what if that is the top for gold? You can invest in silver, but what if silver did top already, right? Bitcoin definitely has not topped. And all you need is $1 trillion of the however many 20 odd $30 trillion that came into the market for precious metals to move into Bitcoin, to rotate to Bitcoin. And you're going to blow off the last all-time high easily because you have also the treasury companies investing as well. So it goes back to the preferreds. So it's non-dilutive. He's basically sharing Bitcoin upside with investors, and he's willing to absorb the volatility, right? He'll give you 10, 11% on STRC, and he'll take the upside on that. And he has the war chest of cash to finance that for 2 years at least. And it's really funny, like investors, they're thinking at it from such short-term perspective. Like that seemed to satiate them, and that got STRC to 100. But what they're forgetting is like, what is in 2 years? It's the halving again. So yeah, everyone is so short-sighted, and it is really always the people that have a longer time horizon, a lower time preference, that win. And this is just repeated in history so much. Like cycles, not so much. Maybe massive cycles of like, decade-long cycles, but the cycle of people with low time preference and long time horizons winning is the cycle you want to look at, right? But he's basically created an infinite bid machine, and these machines are being replicated across the board. So they can do this forever as long as people want 10% or 11%, and they'll just absorb all the Bitcoin. So any dip it's a discount. It's making their lives easier, and they're going to average down. So I just don't see these dips holding. And people like to say also there's going to be a 80% drawdown because it happened in the past. Like every cycle this happens, but the structure fundamentally has changed. And if you say that stuff, it does not make any sense. Like these things did not exist then, right? And people will like to say he's going to get liquidated. He's not getting liquidated. Bitcoin can drop to 20,000 and he'll still be buying.
Samson Mow explains that short-term drops in Bitcoin's price do happen, but they are usually caused by a few specific players rather than the market naturally. He points out that sudden sell-offs don't happen on their own. According to Mow, 3 main groups push prices down: traders who take too much risk and lose big, trading firms trying to manipulate the market for quick profits, and dishonest exchanges selling Bitcoin they don't actually have. While these actions can make the price fall temporarily, they all carry big risks. Risky traders can be wiped out, manipulators can get caught when prices suddenly jump back up, and fraudulent exchanges eventually collapse when people try to withdraw their coins. Despite these short-term drops, Mow says long-term demand for Bitcoin is much stronger. There are always buyers of last resort long-term holders and companies buying Bitcoin to hold in their treasuries. These buyers help support the market and make sure short-term price suppression can't last forever. Some investors even have large amounts of cash ready to buy dips, creating what Mow calls infinite bid machines they can keep buying anytime the price drops. Samson Mow emphasizes a key lesson: people who think long-term usually win. Short-term investors may panic during drops, but patient investors who focus on years ahead benefit the most. He says that even if Bitcoin falls sharply, these buyers will keep accumulating, which helps the market stay strong. In short, temporary price drops are just opportunities for smart, long-term investors to buy more, and the overall trend of Bitcoin remains upward.